Welcome to Zoom Out Bitcoin, the channel where we take a step back, zoom out, and look at the bigger picture involving Bitcoin. Retirement accounts are finally getting access to the best performing asset over the last decade. This isn't just big for Bitcoin though. This could change the way that millions of Americans save. The vast majority of Americans save for retirement through employee-sponsored 401k plans. These plans, up until recently, have been effectively banned from allocating any capital into Bitcoin or Bitcoin ETFs. The only retirement accounts that truly allowed any Bitcoin exposure was self-directed IRA accounts. That is, until now. On August 7th, 2025, Donald J. Trump signed an executive order directing regulators to allow for Bitcoin and other alternative investments into these retirement accounts. This opens the door for nearly 70 million active 401k participants and opens access to nearly $8.9 trillion of market cap to the Bitcoin world. These aren't just short-term trading accounts. 401k accounts are long-term focused buy and hold accounts. Similar to when a corporation or a government buys Bitcoin and adds it to its balance sheet, 401k accounts are buying to hold for years and oftentimes decades. This $9 trillion market could only be the start. US retirement assets value over $40 trillion. Once Bitcoin is allowed in one retirement account, IRAs, 403Bs, and pensions are going to begin demanding that Bitcoin is allowed in their accounts as well. This one move could open the door for Bitcoin being allowed in every single retirement vehicle that we see. Most Americans use a directed retirement account. This means you contribute money to your institution and they invest the money for you. This means that billions of dollars are invested automatically without the actual capital holders doing any research or making active decisions on where they want their money to go. If Bitcoin could become even a single percentage allocation into these types of funds, that would be a structural, recurring demand that happens whether people actually believe in Bitcoin or not. Which brings us to one of Bitcoin's biggest criticisms: volatility. Retirement accounts are natural volatility dampers. Once Bitcoin is in these accounts, it will be held long-term through all of the bull and bear cycles, naturally beginning to dampen out the wild swings that we've seen over the long run. This isn't just good for Bitcoin, however. This is also good for retirees. Retirees have been told to think long-term and to invest in safe assets like long-term US bonds. Over the last 5 years, these bonds are down nearly 50%. During the exact same time frame, the S&P 500 has doubled, housing has nearly doubled, and Bitcoin has gone up over 5x. These investors were told to think long-term, but the assets they were actually allowed to allocate money into didn't reflect this notion. Realistically, I think the immediate effect on Bitcoin's price will be very small, maybe only a couple percentage points. But whenever we take a step back and zoom out, I think the long-term effect could be huge. Adoption will be very slow. Even after the executive order was signed, 401ks still need to come out with investment vehicles, update their plans, and get sponsors on board. This could take months. Even whenever this is done, sponsors are going to be very cautious, and I expect initial allocations to only be 1% to 2%. Once adoption does begin to spread, however, this is whenever Bitcoin could see itself fall into default allocations. This is when the magic really happens. Even just a 1% allocation into these default plans could create a structural, recurring, approximately $100 billion demand for Bitcoin every single year. From here, the sky is truly the limit. A 5% allocation to these default plans would nearly double the current Bitcoin market cap as we know it today. Bitcoin adoption has created an aggressive feedback loop, where adoption such as in retirement accounts has begun to drive the price higher, which spreads to more retirement accounts and more investors buying, which leads to higher prices and more adoption, so on and so forth. Bitcoin is reaching terminal velocity. It's become so widespread and so many people are invested in its success at this point, the train has become almost impossible to stop. It's crazy to think that 1 year ago, we would have thought it was insane to say that Bitcoin's price would be at $100,000 because that was just so high. But very soon, it's going to be insane to think about Bitcoin's price being only $100,000 because that would be so cheap compared to what we've seen it at today. Bitcoin's path into 401Ks is going to be looked back on as a massive milestone, and not just for its price, but because it gave access to everyday savers to an asset that has outperformed nearly every other asset over the past decade. Whether you believe Bitcoin's going to go up or whether you believe it's going to go down, either way you cut it, 401k accounts just got a lot more interesting. Thank you all for listening. This is Zoom Out Bitcoin, and don't forget, when in doubt, zoom out.